Use this exact strategy to pass all of your evaluations and get funded. Okay, today we're going to be going over a strategy. I'm going to give you all the steps that you need to look for. Use this model, use this exact strategy, and elevate your trading, become profitable, become consistent, and only look for these A+ setups, and you will pass your evaluations. Okay, so here are our steps. First, we're going to be looking for a 1 hour or 4 hour fair value gap. Here we have a 4 hour bullish fair value gap. Okay. Next, we want to find an area of original consolidation and outline it. So here you can see before we took out a lot of this liquidity to the downside, we have an area of consolidation right in here. Now we want to use the candle bodies here. Okay, so notice if we trap price in here, this candle body, and we stayed inside of this range, and all of these candle body lows here until we broke below this candle body closure at 1049. We then use it as resistance to then displace away from. Okay, so this is our area of original consolidation. We want to then measure from the high of this box down to the low and measure about -2 to 2.5 standard deviations. This will give you about your range, which lines up with just about this 4 hour fair value gap. Okay, so our next step, we want to wait for a change in the state of delivery. What does that mean? We want at least 2 bearish, because we're looking to target back up. We're looking for 2 bearish fair value gaps to be broken. Okay, so you can see here we have 1. We'll make them red. Then we have a second one just above here. Okay, so candle body closure above 1. This one's broken. Now we need another one to be broken to confirm a change in the state of delivery. There's your candle body closure above the second fair value gap. So here's our bullish change in the state of delivery. Okay, so now our next step, we're going to be looking to enter off a bullish fair value gap. So we have 1 here, and we'll wait for the next candle, starting to create one just in here. Okay, so now we have 2. Now notice how we have overlapping fair value gaps. We have a bearish one and a bullish one. This is your balanced price range. Okay, so price should not want to come back down here because it's already been efficiently delivered on both sides of the market. So we're going to be looking at this one to trade. Okay, so this enter on the fair value gap, and we're going to target the original consolidation high or buy side. So we have these highs in here as our buy side liquidity and our target. Okay, so we're going to wait for price to tap into this fair value gap. There we go. There's your entry. Stop loss below here, right? These 3 candles form this gap. So below this candle's low should not come back down to our balanced price range, and our target will be buy side liquidity there. Okay. So price dips in. Notice how the candle bodies close above. We're respecting. And we continue to respect bullish order flow as we drive higher and higher. Okay. What gives you the confidence to hold these? Well, if we have a change in the state of delivery, right, we need 2 or more fair value gaps to be broken. Okay. We have a small gap in here, but notice how even though we close beneath 1, The second one after that holds price, we continue to drive higher. So as we're following price in bullish price action, we do not want to break more than 2 bullish PD arrays or fair value gaps. That will give you confidence to hold your trade and trail your stops to your take profit or get stopped out in profit. Okay. If you like this content, don't forget to give me a follow, hit that like, comment down below. I'm going to be doing a free Sunday class on this exact strategy and Sunday free classes. If you want to get in, click the link in the description and come join the free Discord and the free class. Or also you can trade live with me free for 7 days in the same link below. And until next time, guys, trade safe.